All right, I guess we can start today. So good afternoon, everyone who has joined and will be joining later. And welcome to inGain's and Fintech Connect webinar. So this time we are running a series for the first time, and we'll have three different topics on different market entries or different region entries. So today we are going to start with Africa, how to enter fintech business in Africa. And we'll continue the upcoming weeks with Southeast Asia and Latin America. Together with Stella Jemeljanova, the founder and CEO of Expolux. Hi, Stella. It's a pleasure having you.
Hi, Armands. Nice to meet you distantly, at least.
Yeah, it's been a while. We met in face since you are now a global citizen, as I would say. And Stella, yeah, so you've got a vast experience in fintech across Europe, Southeast Asia, LATAM, and also Africa. So yeah, let's start maybe by introducing yourself, who you are, what you do, what's your background, and also maybe where you live now, and what's happening.
Thank you, Armands. Yeah, obviously, my name is Stella, that's for sure. I'm originally from our small, cozy country from Europe, Latvia. But for the last 7 years, I've been living in Sweden, and Vietnam, and the Philippines, Kenya, and Uganda. And currently, for the last year, I've been living in Tanzania. So I'm also located in Tanzania. Mm-hmm. And supporting the fintech expansion here in Africa. That was my priority for the last 3 years. That was exactly why I moved from Southeast Asia to Africa, to learn more about African culture and how the things are happening here. But in general, I have 2 ventures. So one of them is consulting, and we are supporting fintech industry, fintech players with their expansion plans to developing countries, as there are plenty of experts in developed countries like European markets or United States, but it's very hard to find someone knowledgeable in developing countries. And the second, what I'm also doing, I have an IT company which is supporting digital lenders with enriching them with data, with alternative data from customers' transactions of the wallets, payment gateways. Basically, we are trying to give them the data about unbanked population, which is very hard to find in developing countries. So the digital lenders would also boost the financial inclusion, giving the opportunity to have a loan to those people who are not eligible in normal circumstances.
All right. So basically, you are the driver of financial inclusion and helping businesses to do that mission, which is wonderful. Out of the whole world, we have chosen to speak about 3 regions, Africa, Southeast Asia, and Latin America. And today speaking about Africa, so why do you think it is important to talk about Africa, and why it is, let's say, interesting for businesses and fintechs to look into Africa as a region?
In my opinion, the answer to this question comes from the history, because the Africa, it was a colony for a long, long time, and basically the colonies left only in the second half of the last century. It means that Africa is independent only for like 50 years approximately. So of course, the different countries have different independence time. What means that Africa is pretty young markets. They're super young markets there. And also it's very important to know that today we are talking more about sub-Saharan Africa. So everything what is below Sahara. So we're not talking about Arabian Africa like Egypt, Turkey, and everything what is around. And given the history and given the young age of Africa, of course, Africa has a lot of gaps in all the processes which exist in Africa. And gaps, those are the opportunities for smart investors. So basically in Africa, what is really beneficial for investors, that they can solve the real problems. It's not like in Europe when we have many digital banks and here you go, one more digital bank with maybe some tiny fine tuning. Here the gaps are big and in payments and lending, in crypto, everywhere. And the investors have this opportunity to close some gaps, introducing really interesting solutions, which would be better or completely new rather than the ones which exist on the markets. So, and of course, easier to find this gap, faster you will see the opportunity here. You don't need to really search for it. There are plenty of gaps, really.
All right. So if somebody is out of ideas, what type of business to do? So like just look for gaps in Africa. But yeah, Africa, of course, is a continent we can't forget. So it's like about our small region, Baltic states. It's three different countries, and in Africa, of course, is very different. So what would be your judgment about what are the differences between these regions?
Yeah, you're completely right. Even our small Baltic states, three countries, are super different, and we can discuss hours about this difference. Yeah, but if, let's say, we are talking about the difference in terms of Africa and some other regions, yeah, definitely, again, we're coming back to the point that Africa is super young. Yeah, so and we discussed this already. Secondly, because of this age, the mindset of people, especially who are earliest millennials or who came before millennials, their mindset is still stick a bit with that period of colonization.
All right.
So the people who are older than the latest millennials, they have already different mindset. They don't have this colonist mindset. But those bit older people, they do have that definitely can be visible in the majority of African countries in the attitude of people. Secondly, location. So geolocation is super important because, let's say, if we talk about Southeast Asia, they have a big brother of China nearby. Chinese are investing a lot into Southeast Asia, what makes them grow very fast. And it happened not yesterday and not 10 years ago. It happened pretty long time ago. Latin America, they have ESVE, so basically United States nearby. So, and again, big brother who is investing. But Africa doesn't have this big brother. So that's why those two regions, they boomed first, and then only even Chinese, okay, they are in Africa, but not in that scale comparing to United States. That's definitely very important. And of course, also religion. That Asian countries, they have Buddhism, they have Confucianism, and they have all this wisdom and calmness, which makes them more like slow thinkers. Africans, indeed, there are Muslims for sure, but given that Muslims are not the biggest religion, biggest are still Catholics and some other, or not all Catholics mostly, that of course the impact of their religion is bigger, so it doesn't promote this wisdom and this calmness. So that's why definitely the religion here is one of the key factors as well.
Okay. You already touched upon these foreign investors, and of course, I mean, if we talk about China or US influence, we can see it globally. But then if we look on the European investors and investors from other regions, so what is how you would assess what is the general attitude towards the foreign investors, and if it is different between these regions anyhow?
Definitely, it's different, yeah. And I know that investors from European Union, they're scared about Africa, so they're afraid to go there. But it's understandable why, because investors here, they are treated as a sack of money.
All right.
So there is again this division into two different generations. So the generation which is older, who suffered during this colonization, yeah, and so they, of course, they're trying to get from investor as much as possible in a quick way. At the same time, the younger generation who are now 30, below 30, they understand that investors, that's long-term gain, right? If you got the investor, so you need to work hard to bring the benefit to both yourself and the investor. And this,
Right.
yeah, this, yeah.
Yeah.
And yeah,
I do get your point.
yeah. So basically, but for investors, they need to be super cautious whom they are working with, and when they hear that there's some opportunity from the locals, they need really to double check everything, not to get into this trap of quick win from someone's side.
Okay. Good to know. All right, but then since today we will talk more about fintech and in the perspective also of lending. What type of products are in demand? So I don't know. In Europe, credit cards and in US, credit cards are big consumer finance market. So I doubt it's the same in Africa. So what are the local nuances there which are in demand?
It's very important to understand that given that the level of poverty here, the people who are below middle income, they do not think about the future. They think about right now, right here, because they need to feed their families. They need to feed them today, tomorrow, not in 1 month, not in 1 year. That's why the attitude in general to the borrowed money is very undisciplined and in general, to be honest, irresponsible, sorry. So they are taking money and they do not think how they are going to pay them back. Of course, again, countries are different, yeah. So for example, if we consider South Africa, and South Africa was very important strategic point for colonies, because this was a bridge between Asia and Europe. That's why it's much more developed, and colonists definitely invested a lot into infrastructure of South Africa as they needed it. So in South Africa, it's better. So in South Africa's discipline is definitely much better comparing to the rest of the African countries or sub-Saharan African countries. And given that point, it's not really very profitable and smart to lend into the mass market like it's very common in Europe, United States, and Southeast Asia, etc. Because then the default rates, they will be super high. They will be like 40, 50%. What is much smarter is to boost the economy of the countries by lending to MSMEs. I would even focus more on these micro and small companies, because many people here, they can't find any job. The job just doesn't exist because, again, the inflow of invested money is not that big. So that's why the vacancies, they're not growing. So, and people just can't find the job, and they're doing something. They're opening some street food kiosks. They're opening some small shop. They are doing some reselling of the goods, etc. So, and these people, in order to survive, of course, some of them, they need the capital. This is some small, maybe it's 100 USD just to get the goods from one place and sell them in another place. And majority of the people, they live like this in Africa. So that's why if a digital lender would like to build a product, so that would be much smarter to focus on this business, the small businesses. And even in the businesses, it's very, very important to find the niche, because there are super many nuances. For example, if we are talking about car wash. So I know that people on Sunday, they go to the church. If you give, for example, to the money to car wash, yeah, so for example, to buy some tool or some technical stuff, yeah. So
Stella, I think we lost you for... Let's remember that the internet... I'm sorry, Stella, we lost you for a few seconds, and you were explaining about the car wash, that they need some money to buy the equipment.
Yeah, sorry. Tanzanian internet, unfortunately, you can't do anything.
No worries. I think we are still doing very well.
So sorry, where did you lost me?
We lost you at where you were saying that the car washes, they need some financing to buy the equipment.
Yeah, and the point was that if the due date falls on Sunday, people are going to the church on Sunday. Employees are going to the church on Sunday. On Sunday, the car wash might not even work, or it will be like some on the very low level. And if the payment comes there, there will be no payment for sure. Yeah. So, and those are small nuances, when someone wants to lend digitally, they must be considered. So that's why, answering the question, what is like, which way of digital lending is the most famous, but definitely that is to the businesses. That's for sure, because mass market is very hard to handle. There are, in Kenya, for example, there are a few companies which are handling mass market, actually same in the whole East Africa, but those are telcos. These companies, they are connected to telcos, they're partnering with telcos, and of course, based on telcos data, they can give out the loans to the mass market. But the rest, they're trying. There are some successful, definitely examples like Tala or Branch, for example, branches in Nigeria, branches in Kenya. Yeah, so, but they are not that big as those, the ones which are lending out through telcos. And when it comes to the mode of repayment or giving out the money, banking in general definitely is pretty poor here. I mean, it's intended only for the upper class people, not to middle class and everyone who is below. And the rest of the population, they're using either cash or mobile money. Mobile money, they are super popular in majority, maybe even in all the African countries, but definitely I don't want to tell that it's all African countries. But yeah, there's a huge dominance by mobile money, and majority of them, they belong to telcos. Again, the biggest one is Vodacom, which is Safaricom, which is M-Pesa. So it exists in around more than 10 African markets. It's the most dominant player, yeah, and it's very hard again to compete with them because they're super dominant and they want to keep this dominance, yeah. And at the same time, it's a very convenient way for digital lenders to collect the money or to cash out the money, because like maybe 90% or 70% of the population are using this wallet. So so there are process and cons. And another side of this is that those telco services, I mean, mobile monies are super expensive. And that's why people don't want to use it. Sometimes when you're paying 10 USD, you pay 1 USD commission, which is 10%. It's crazy. Of course, it's for more than for a small amount. And actually, this is exactly what prevents Africa from becoming even more digital. it could be even more digital by now. But those crazy commissions, many people who are the above middle class, they just don't want to use it, and they prefer cash. Of course. Only cash. Yeah. But in general, cash and those mobile wallets, those are two the most important things when it comes to the operations, payments, and payouts and pay-ins when it comes to the digital lending.
Yeah, yeah. But I mean, in general, I think what's my experience about Africa is that there are many lenders which, for example, they pay out money through some mobile money apps or M-Pesa or similar. But then they also give an opportunity to collect the money on field in cash. So that's of course, there are some security risks and others, but still, it's quite a big market there. By the way, we now discussed more on this unsecured cash loans, so to say. But what's your take on different type of leasings? Because I know that, for example, there have been scooter leasing services emerging. There are mobile phone now leasing and subscription services emerging. So what about this product financing or product as a service subscription? So what's your observations in that area, if you have had any experience there?
Yeah, definitely I had, and I would say that this is one of the best things what happened with the African countries in the latest time. That of course we have some companies from Latvia, Mogo, and Vatu, so and some other countries here, companies here. So the problem is that all this for leasing vehicles, they're super expensive for people who who are living on the 200 USD per month approximately. Yeah? But what these guys who are doing the leasing or point of sale, like for devices, etc., they're doing great jobs. That they're giving the opportunity to people to get something. For example, if it is vehicle, the most famous here in Africa, one of the most famous is Boda Boda. It's a motorbike. So then tuk-tuk, I guess we know what is tuk-tuk, yeah. So and for motorbikes, people who have motorbikes, they can work in Bolt, for example, yeah. So basically the guys who are doing this leasing cleansing, they're really helping to people to get a job, because without this motorbike, if person can't buy this motorbike, wouldn't have an income. But now he's interested in paying back the loan, because this loan actually fits him.
Yeah.
So, and that's why there is no point, unless there was intended fraud from the very beginning, there's no point to stop paying. And the same with, for example, device lending. Many people here, they still have a button phones. So, and there are two main reasons why they do have. First of all, of course, they cannot afford to buy the smartphone, because again, we're coming to the point that Africa doesn't have big brother nearby who would supply very cheap devices. So, and the second point is that some people, they think that my life is so simple. Why do I need some sophisticated devices, sophisticated processes? I have my button phone, I'm topping up my internet. So basically I'm doing agriculture. So I even don't need the smartphone. But of course, for the first type of people who are just cannot afford to buy, yes, of course, it's a huge opportunity for them to buy a smartphone, because it's again gives some other opportunities. Maybe you can have online shops like from the phone, because again they cannot afford to have a laptop. So, but at least they can set up something on their phone, and this gives opportunity. So I really wish that there would be more companies which are doing some leasing or device financing or any other asset financing loans, as this really boosts the economy and help. What's the most important, I guess, is very important for all investors to help people.
Okay. By the way, one idea that came across me as we were discussing, maybe for the audience to make sure we are on the same page. When we talk about these micro businesses, they are typically sole entrepreneurs. you consider them as a business, but essentially it's an individual, and you perform this underwriting and assessment as for an individual. Simply their cash in is not the salary, but the goods they sell. So it's not like if you are in consumer finance, most probably you can still serve these sole entrepreneurs. You have the knowledge about it, at least the general perception. It's not really like business scoring as we might imagine. So, but then maybe Stella, let's go into the operations more deeply. So, and let's talk about how you establish whether there is licensing. Then where do you get the customers from? How do you underwrite them? Where do you get data about them? Debt collection, payments, etc. So let's try to describe the full flow, what it takes basically to set up, to launch the operations and run them.
Okay, so of course, definitely we start with the licensing, as this is the beginning of the establishing any company. Licensing in general in Africa, it's a really pain point.
Okay.
Because when it comes to licensing, and you need to work with government institutions, mostly with a central bank or something similar, who is in charge of the licensing for payments, digital lenders, doesn't matter, e-money and all of them. And to me, it's really the hardest thing ever in Africa to work with the government people. So
Okay.
of course they kind of they're trying their best overall to kind of move on with the regulation, etc. But still, of course, we know that the speed in fintech is usually fantastic, and we've got used to this. There might be some speed. And of course, here we do not see the speed. Yeah, we need to be patient. That's first thing. Secondly, in Africa, there is one big nuance. What's written in the law and what happens on practice, those might be two pretty different things.
Okay.
And
don't trust what you read.
Yeah. And when the company wants to get the licensing, definitely they need not only just to talk to the lawyer who will say, okay, as per regulation, we need to pay this, then this will be the capital, and this something else. So they need to find out from the peers and from other license holders how actually it happens. Yeah. Because sometimes, even if you're working with some good law firm, average good law firm, then it might not have a connection with the government people who are exactly doing the licensing processes. Without connection, it's there are, of course, some exceptions, like even Nigeria, for example. In Nigeria, it's not that harsh, or South Africa, it's not that harsh. I mean, the regular lawyer can get the license, yeah, but in majority of the countries, that you need just to have a lawyer who has a connection with the government. So, and this is the way how you will get the license. Otherwise, it will be just 1 year back and forth, second year back and forth, third year back and forth, even though the whole process is supposed to take, I don't know, 6 months or 9 months. Okay. So that's definitely the point.
Licensing, I think, all across where you operate takes longer than it's expected. It's very rare that it happens on time.
No, but question is always about what is the delay, right? If the delay is 2 months because of some additional questions, that's purely normal practice everywhere. But if the delay is for 1 year for just digital digital lending unsecured loans, I mean, that's insane. And it happens, it really happens. So yeah, that's regarding the licenses. So now regarding the operations, after we got a license, we need to establish operations. So one of the things that we need to establish is, of course, risk assessment to give the loans. So that's also pretty big pain point just because of the lack of data. So in Nigeria, it's much easier. In South Africa, it's much easier. Those two countries, they have some data. Of course, the lender must be pretty experienced in terms of using of alternative data. I mean, even in South Africa or Nigeria, it's not like the lender will use credit bureau. No, creativity plus experience in using something else than credit bureau. Digital identity, transactions, set up partnership. Maybe there is some revenue sharing with someone who owns the data. Maybe sometimes even to buy the data from someone. It's in general, it's of course possible. And definitely majority of the countries in Africa, they don't have enough data. And the only thing what to do is paperwork mostly, or application. When the customer applies for the loan through the application, then of course the data is taken from the application, and there is a place of data what's enough to make a decision. But rather than this, if we're going with a standard web version of digital loan, unsecured loan, it will be a super hard story. So we need always to find something.
Yeah, but let's be more specific, because if I'm looking from my European perspective, what I would do, there is open banking, I get income verification, I check affordability, credit bureau for negative records, etc. But nothing is there. But please name then what sources are available, because I know telco data is available. Then somebody even they build bank statement out of SMSs from M-Pesa, which actually state how much money came in or came out of your account. So they are able to build the full transaction list out of it. So give us like 5 or 3 main data sources, maybe even the vendors itself, the names.
Well, for example, if we consider Kenya as one of the biggest, again, the strongest hubs for Africa in terms of fintechs, how M-Pesa works here, they do not provide you the data through API, but you can always, how lenders are doing, they're requesting a slip, like a bank statement, same from mobile money. They're requesting from the customer uploads PDF, given that the format is same for everyone in Kenya. So meaning OCR here is applied, and basically then how the lenders can get information about the customer's transactions. In South Africa, for example, it's a bit different. In South Africa, they have kind of open banking. There are aggregators who are working with the banks with this transactional data. So they provide the transactions, they provide bank account validation. Same as in Nigeria. In Nigeria, there are companies which are providing you bank account validation. You can truly identify if this bank account belongs to this person or it doesn't. It's not like only it exists or doesn't exist, but it belongs to this person or it doesn't. So also same as in South Africa, in Nigeria, they have some aggregators which are working with the banks. But again, it happens because those two countries, Nigeria and South Africa, they're more developed in terms of fintech infrastructure. They have one thing what does not exist in other countries, almost all. It's digital banks. In Nigeria, there are plenty of digital banks, Fair Money, Carbon, some like even more. It's like around, I guess, 8 or something. So South Africa, same. There are plenty of digital banks. What again shows the level of development of fintechs. Because to launch a digital bank in Uganda or Kenya, even Kenya, which is like the third market after Nigeria and South Africa, it would be really a huge headache. And only traditional banks have digital division. They do have they do small amount lending, but as a separate division from their core bank, which is doing only this part. So yeah, that's why kind of mostly how lenders are doing, they're doing the kind of how they're getting the data, it's semi-manually. For example, in Tanzania, we have here the register of all the people. So it's when you can request by unique identifier as a person, and you can find out his name, surname, and basically validate against your data if the person is correct. But there are no other data, for example, in Tanzania, rather than this one and credit bureaus. So that's why kind of lenders trying to be semi-automated, trying to get as much information from the customer, and then somehow to try at least to validate this information if the information is true.
Okay, gotcha. All right, but there's probably more like telcos and device, because if somebody has a smartphone, that's a good sign already, right? And others. All right, so we have the data, and we are ready to move forward in setting up the operations.
Yeah, so after risk assessment, of course, usually we have a debt collection. Debt collection, that's, I would say, the thing which unites all the three regions: Latin America, Africa, and Southeast Asia. Because of mass of the other system, that it's not like we used to have in Europe, so that each house has its own number, street, etc. So it's not like like this here. So usually people explain where they live by, okay, I live, there is a tree, then go 5 steps ahead, then you will see something else, and turn to the right. So, and then in front of my house, you will see something, some shop, for example.
Yeah.
So, and of course, this gives, this actually prevents a good debt collection, because it's hard to find where this debtor is. And at the same time, people are not really afraid of calls. When you're calling and you're asking for debt, people are not really afraid. So they, again, it's because they think about today. So today I have something to eat. So tomorrow they will call me, then I will think if I can do something. But in general, debt collection is very hard in Africa. When the lender is doing the business, this is the last thing what the lender must rely on. So the core is the risk assessment, not the debt collection. Debt collection might help a bit, but it will be really a very small contribution. And at the same time, the market of selling the debts to the third parties is not it's not developed at all. So it's very case. Again, in South Africa, there are some cases. In Nigeria, there are some cases. Kenya is starting. It's just starting. So other countries, when I talked about this with banks, they were sell debt. Why? So, and basically it's very hard for them to understand. So that's why debt collection is just usually traditional via calls, but it's very poor. Another thing, policemen. Police, it's very strong body of Africa. So, but the problem is that if you're giving out 100,000 loans per month, so basically you cannot give everything to the police. You can give some, but you cannot give all of them, even 10%. Police will not handle 10,000 cases or like 5,000 cases. So that's why it's super sophisticated.
Okay. Yeah, what I see is actually that we start to run out of time, but I will allow ourselves to maybe take away a bit of Q&A time, and we'll be spending a bit more time on this discussion. So customer acquisition, where do you generate the customers, or they always come to you, or you need to hunt them, so to say?
Customer acquisition is tricky in that sense, as we talked that not all people have smartphones. So meaning if you want to grab really big part of the population, then you need to look at the ones who do not have smartphones. And the only way how to give them the loans, more or less, is through USSD, when you are writing some hash, 1, 2, 3, some star, and then the menu pop-ups, and then they can take the loan. But very few companies are doing that, mostly the ones who are connected somehow to telco. So because telco allows this, but there are some exceptions. Yeah, there are some exceptions. But rather than this, the acquisition is pretty hard part in the sense that, okay, you will get many people, but how many of them are good people? Is that right? Because if you have this inflow, maybe you have a lot of fraudsters. So that's the most difficult part, to control the quality. When people see new lenders, they always, oh, I will try, and I will disappear, and no one will find me. Yeah. So that's why there is no problem with getting the leads, but it's the problem about the quality of those leads if we're talking about the smartphones, because mostly, again, majority of lenders, they're giving the loans to people who have smartphones, meaning the competition in this segment is higher than the one in the segment of button phones.
Okay. And then for payments, so basically, should you accept the cash as well, and how you do it, or avoid it, or what's your take on it?
Payments, the cash, I would not say that cash is acceptable when you bring the money to the branch, unless you're doing the offline lending. But there are many kiosks which are related to telcos, or better to say mobile money, where a person can come with the cash, give the cash, and to put it on someone's phone or to make any payment. And that is very popular here. As we talked, especially for poor people, as they don't want to have all those commissions and they pay via cash.
Okay. So the biggest banks are telcos, effectively.
Yeah, that's true.
All right. So all the operations are always run by people, well, what you said, that there is a lot of unemployed and few vacancies. It sounds like plain vanilla. So then people reaching out to have a single position or even more. So what's the situation?
Of course, given again, we're coming back to the histories of its young region, and the education system is not really developed very well, even though, again, younger generations are trying their best, they're really trying their best, but given that majority of, let's say, big companies, they belong to older people, who are wealthy, they, of course, they're trying to push their own family members, friends, and some relatives. And those young talents, they just don't have any place in this infrastructure. So even the person super talented want to work, really hard work, but then his place will be occupied by someone who doesn't care about this work, but he was just a relative of someone. And this slows down a lot the development of people here. That's why it's so difficult to find talents, is because talented people cannot get their place. They cannot build the career, or it's very hard for them to build the career. Right. Maybe someone being 30 could be already head of some department, but he is doing bulk delivery because no one takes him, as he is not a relative of someone. But at the same time, when you consider the talents, which are the position you want them to have for hiring, they might not be so ambitious because they really do not care. They're sitting, they don't want anyone to touch them, they're comfortably sitting, and basically that's it. So, and of course, when it comes to searching for the talents here, at least my approach is to search not from only experience, but really when talking to the person, you understand if he has the right attitude. Because to me, at least, it's better to hire someone with the right attitude and to teach than to hire someone who doesn't care, and maybe tomorrow his relative will call him back and basically he will move back. So the talent acquisition is super complicated here, but it's super important at the same time.
Okay. What about international management? Do you need some people to be on the spot?
Definitely yes, and the key reason is not that locals can't do something. When you teach them, they can do everything. But the problem is that when someone from Europe comes, or China or United States, have different standards. Okay. And those people, locals, they have never seen this level of standards, or they might never seen, it would be right, they might never seen these standards. And given this, they just don't know that, okay, they can actually do better with additional work, even no additional hours, but they can do better, just more effective, different tools, and they can do better. So international team definitely must set up those standards and improve the effectiveness, efficiency of the operations.
Okay. Well, since inGain is doing loan management systems and we operate in Africa as well, so I can't resist to ask the question. So how do you see what is the role of technology when it comes to operations in Africa? And by the way, we have a question also from the audience is how common is automation in lending processes in African markets? So automation probably goes in line with the technology.
I would say that it's crucial. So definitely those two things, I mean, automation and new, like more updated platforms, CRMs are needed. But there's another problem with vendors, and I try to work with several IT vendors. What we faced here, that in order to change the system, that the team must have an order from the top that, okay, we're changing the system. But then the team have to do, it's a huge work to change the system. It's a gigantic work. And no one wants to do this work. And
so it's
even
super
if
big
there's
hierarchy, what you're saying. Okay.
Yes, it's a hierarchy, and people who are on top, they just don't want to do this. Why? Okay, everything is working. Why do I need extra 10%, for example, if everything is working and making my big money? But then if we get 10% more, I will need to work more because I will have additional project to supervise. And even when someone, even if a lower level, sometimes admit, oh, it would be super good to have this because we are doing some manual, for example, paperwork. But then again, when it comes to higher levels, then where the showstoppers are.
Okay, but then automation might solve this hierarchy issue. So how common then it is?
Then you will need to lay off people, right, who are on the top. So, but they don't want to be laid off. So meaning that they will resist even more.
So your family member is losing the position.
Yes, exactly. Why to implement this, especially when you are pushing something, if you don't know the CEO, for example, you're pushing through head of something, then C-level, then CEO, then this kind of some head of IT, for example, he will think, okay, if we will implement this person, we don't need him, this person, we don't need him, they're my friends.
Yeah.
So,
I'm
no,
blocking.
thank you. Yeah.
Okay, fair enough. So my question is really like then how to get the competitive edge, and also one of well, let's not mix with the audience question. Let's stick with it. So what we have people whom we can train. We know that operations we can run. We know how that we should not let's say pray for the debt collection to work. We must let's say work on the acceptance rate. So when we put all this together, so how to get this competitive edge, and
regarding competitive edge, it's not very hard to get it comparing to, let's say, saturated Europe or United States. Here, all the solutions, again, even say M-Pesa, they're young. And M-Pesa, for example, as a mobile money, it's super expensive again. So just build something what is not that expensive. Some other solutions which are smaller, but not giants, maybe someone local introduce something to the market successfully. They're very new and they have usually a lot of gaps. So intuitive design, intuitive usage, lower cost, a bit more convenience, faster. So these things, it's not like in Europe when you can do it one step faster. Here, you can do it 5 steps faster because the technologies and all these solutions are not so high level of development and they are not so long on the market as we have in our part of the world.
Okay. And then maybe from my side, the final question is, since you have launched yourself several lending businesses in different regions, and in Africa you have helped others to do so. So can you give some tips and tricks how to increase the probability of success when launching operations in Africa?
The probability of success, in my point of view, is hidden behind the research. Because people, when they want, okay, we have a business in Southeast Asia, for example, then I'm thinking, okay, Southeast Asia is also not so developed as Africa, so I will repeat something similar, more or less, a bit adjustments. But those are two different things. I'm not even comparing with companies in Europe or some developed countries. The key point here is to come here and to see how the things are happening, not to read from Google, not to, of course, talking with the peers, it's very good. It will give you some hints to what to look at, but people need really to come who are in charge and experience what is happening here to see those gaps. Because otherwise it's sometimes with our brain, and it's even hard to imagine something that this might happen, and you are listening some story as a fairy tale. You don't perceive it seriously. You're like, okay, it happened with someone. But when you experience, at least, even not business related, even just casual, regularly, you're going out to buy something and something happens. So when you experience 1, 2 small, tiny things, you understand, oh my God, it's so different here. And only this understanding leads to the proper assessment, what the company needs, where the company are, and what will be the real problems, what the company will face when launching. Not some theoretically, I could face this, but this is the reality.
Okay. So before any strategic decisions, go and experience it. There's always this that you in Google Maps, you just look for the photos where you're going, and then you have this feeling, oh, I almost was there. But then you see that on the picture it was super nice place, but it is actually all rubbish around it.
True, very true.
All right, so maybe jumping into questions from the audience, and the first question is, how do you assess the readiness of a particular African market for digital lending products?
I would say, again, each country is different, but majority of the countries, they are ready, and the lending is already there. And even though I blamed a lot all the telcos, which are doing super high charges, etc., telcos actually, they're also boosting digital lenders. They make people understand that, hey, you can borrow from telcos this money until 10 USD, for example. So meaning they're raising this awareness. In that sense, telcos help. So I would say in majority of the countries, the digital lending is either already here, even without telcos, or at least through telco.
Okay, but then maybe, well, for example, in Europe, what you would be doing when compare the markets, well, of course, there are some things about the market size, etc. But then you try to build these unit economies, you try to understand the pricing, the risks, the defaults, how much you can collect, etc. So maybe, and in Africa, many things you can't do because you don't have data available. What sort of metrics you are looking then? You need to choose between Nigeria, Uganda, Kenya, and South Africa. So how would you compare them? What would be the metrics to look at?
You know how I'm usually advising to my customers is kind of to build a scorecard. So we have several steps. So we have marketing, we have regulation, we have debt collection, we have risk assessment and data, we have operations and talents, for example, And then what we're doing, we're looking at, for each country, we're looking at each metric. So what exactly is happening in this specific field? Then eventually, for each metric, you have the results, and basically eventually you can compare apple with apple. And here also important is always for the company which problems they want to solve. Because maybe the company has some very high level connections on the government level and they don't care about the licensing problem. They can move there and build successful business. Maybe the team has super super, I don't know, blowing minds data scientists, yeah, who can, without data, create a scorecard. I'm joking, of course, but more or less something like this, yes. And of course, they can capture the market, which has less data and with a lower competition. Maybe someone has marketing guru or built something completely new that doesn't exist in the market. For example, South Africa has a lot of digital lenders. So when coming to South Africa, you need to either understand how exactly you will compete with the rest, or to add something new so you have a competitive advantage.
Okay. We have one question also about the product. So what about buy now, pay later, also for different durable goods, like, I don't know, electronics? Or what about, for example, in real estate, I've heard of a project which is still under the development, but so they want to sell it under the business model of rent to own. So basically 20 years of rental contract and you get the property is yours. So yeah, what's your take on these other things like BNPL type of business models?
BNPL is developing. It's just started again recently, but there is an explanation why it is at so early stage. Because majority of people, again, we should not forget that majority of people, they have their earning maybe 200, 300 USD. Yeah? That's a middle class and below. So they're not, if they want to buy something, they're not going to the authorized shop. They're going to some neighbors, they're going to the market. There in each big city, there is a huge market of electronics, clothes, and all those things. So they are not coming to some chain shops. They are coming to some place where there are 100 people who are selling some devices. And of course, here we cannot talk about any BNPL because these people tomorrow they can disappear. So that's exactly the problem. If we are talking about the middle class, above middle class, of course, they attend the shops which are providing BNPL. In a very few African countries so far, very few. So again, we're talking about Nigeria, we're talking about Kenya, yeah, it's already there. South Africa, maybe a few more, yeah, but that's very exceptional cases for the rest of the Africa. Yeah, gotcha. Of course, installments and in general loans for the goods, they are not very popular, and again for the same reason. It's very limited population which is buying something in loan, yeah, from those from the places which are authorized to sell in loans.
Okay, so we have time for one last question, and it's about how about risk and fraud side of thing. Most countries in Africa, they prefer all servers and systems to be in the country due to data privacy policy. On the other side of the continent, like Europe, USA, Canada, UK, is common for investors and local businesses to go for SaaS. What do you think has to be done to create this sympathy for foreign partners intended to do business in Africa, whether they do need to do some partnerships in Africa? So it's a long question. I hope you also read it.
Yeah, I'm reading it. Yeah, and thank you, Alfred. And so first of all, yeah, the regulation. It's indeed Africa has old school regulation which doesn't allow to use the servers from abroad. I mean, if regulation doesn't allow to use a servers from abroad, you cannot do anything with this. You just need to obey the rules. Yes. But in terms of these international solutions, we're coming again to the point where we discuss the implementation of the technologies. Just to become a partner here in Africa, it's not like we met, you gave me a reasonable offer, I say, okay, your offer is reasonable, let me discuss, come back, in 1 week I came back to you, let's do business because it's lucrative for us. No, it doesn't work this way. You need to have 10 meetings, then you need to give something, meaning to pay for the dinner, for example, yeah, so maybe to please people, and only then how the partnership between Africans and non-Africans starts. Even sometimes Africans who moved out of the country, even they are struggling to get a partnership with the locals who are living in the country because they are already perceived as the foreigners.
Okay.
So in general, to answer the question how to implement, it requires really a lot of patience and time, and to be around. As soon as they feel that, okay, you're not around anywhere, connection stops. So we need to keep this connection tight all the time.
All right. Well, thank you, Stella. We are just on time. Hard to believe. It was a great long discussion. Yeah, I would like to remind also everyone that next Thursday, same time, we will be speaking about Southeast Asia. And the week after, we'll be talking about Latin America. So if those regions interest you, stay tuned, and I hope you enjoyed. Thank you, Stella, once again. Lovely discussion. See you next week. I'm happy that we're having the series.
Thank you so much, Armands. Thank you for having me here, and thank you all for all the participants who joined our session and who especially asked the questions. Very interesting to chat with everyone.
Wonderful. All right. Take care and see ya.
See you next time.
Bye.
Bye.